Let's not wait. Welcome everybody. Traditionally, we will go through our presentation template as we present the results. We are today with both Marcin Rulnicki, who is departing for the high seas from next month, and Michał, who is replacing him. So we will walk you through the numbers and the outlook for the future. First, the highlights for the first quarter. Overall, it was a very good quarter, one of the best in the history, and spectacular banking. Very good results in banking segment, mainly thanks to sale of banking licenses that we had in the first quarter. The profitability was unusually high because of this, but above especially last quarter in 2020. POS-related services in Payten also grew very nicely, both in Iberia Peninsula, but also thanks to ECR, electronic cash registers, and independent POS deployment business. Yes, very good e-commerce traditionally, and two acquisitions, especially WebSpot in Macedonia, a marketplace that we have acquired, contributed slightly, not significantly, but slightly to the results. And now let's see what major deals we had. The significant one is the license sales for a bank in Serbia, yes. Otherwise, you can see digital channels, digital edge, digital origination, which we continue selling and introducing to the customer base, to our clients. We have made a major modifications of the mobile banking for one Romanian quite big bank, yes, strengthening their positioning in the mobile setup on the market, yes. In dedicated solutions, we see all the time developing Live, which is our kind of solution, not only for call center, but also for ticketing system and for virtual branch for banks. So this Live solution is omnipotent and has a big potential with the enterprises. And we are counting for the future. We're just starting the BPM business, document management business, but you can see that ABC is one of the solutions in our portfolio. And we see this business growing both in Serbia, in Romania, we hope in Croatia very soon. And we are trying to expand with this business within the region. Worth mentioning for dedicated solutions, it's a Dynatrace. It's a third-party solution, but we have an exclusive partnership with this company, and we are selling this in a subscription mode, and this is nicely contributing to our recurring revenues. In Payten, excellent e-commerce overall, the payment gateway services in the region and in Turkey, but also tokenization product MSU, which sells well. There is one example provided here in the table. Also, 3D secure solutions we are pushing all the time successfully on the market. In processing, which is a very nice business line in payment with recurring revenue, we have won the first customer in Bosnia, so a bank, so we are very happy with this. And in ATM and POS related services, many regulatory changes and new payment schemas changes that we had to introduce on our software for the equipment. Yes, so this nicely contributed to the performance of this unit. And additionally, we are prolonging the signed, some of them 3 years ago, some of them 5 years ago, long-term outsourcing contracts. We are renewing them, and we are happy we are renewing them with the customers who are satisfied. Yes, so this is kind of good news. And the numbers, please, I pass to Marcin.
Hello, good afternoon, everyone. So first, let me summarize Q1 in big numbers, and then Michał will walk you through details, segments, and countries. So starting with the big picture, we are very happy with Q1. As you can see, the growth rates are pretty impressive, especially on the different levels of profits. Maybe top line was not growing so fast. And just to explain why we were able to increase our profitability so significantly with only a single-digit growth in the revenues, because the revenue structure has changed. Yes, we sold much more own products, own services compared to third-party solutions. Michał will again tell you more about it when speaking about segments. But just to mention that the share of own products and services in Q1 in the overall sales value was more than 74%. So this is pretty high as for us. So with moderate growth in revenues, we're able to improve our profitability significantly because, as you can imagine, as own solutions are sold on relatively higher profitability. That's why. Okay. Another good thing is that this growth was to great extent made organically. Okay, so M&A acquisitions contributed to it, but only slightly. When you look at the contribution from the acquisitions, on top line in revenues, it was less than 1 million euro, 900,000 euro more or less. And in EBIT and EBITDA lines, it was respectively 78,000 and 133,000 euros. So looking at the overall growth, acquisitions contributed only a small part of it, and majority came from organic growth. Again, details about operations will come shortly with the coming slides. But what happened below the operating profit? We had very good result on financial activities. We had positive result in the amount of 326,000 euro. Compared to a negative 58,000 last year. The major reason for it was the movement on US dollar to Turkish lira. That was pretty dynamic at the end of the quarter. So lira was weakening against the dollar, and majority of our assets in Turkey are maintained in US dollars. So if lira is weakening against dollar, then we can see positive foreign exchange differences on Turkish balance sheet, and we consolidate these results into our P&L. So this explains a positive result from financial activity. And one last thing to mention here is that the effective tax rate in the first quarter of 2021 was higher than the year before. We ended up with 19.2% compared to 16% in the first 3 months of 2020. The reasons for it, there are two actually. One is operational. So in the structure of our pre-tax profit, we had higher shares from countries with relatively higher tax rate, mainly Spain. And the other thing is that we had some distributions from outside European Union to the holding company that generates additional taxes on group level as well. Another thing that is worth mentioning here is that in Turkey we also had, let's say, less favorable structure of tax profit before tax, because in a part of our activities in Turkey is conducted in special tax zones, and the other part is not. So the other part that is taxed higher increased its share in overall profit before tax in Turkey. So these are the reasons why effective tax rate was higher than the year before, and it partially offset positive foreign exchange differences. But generally speaking, the growth rate on net profit line was even slightly higher than on the operating profit line. One last thing on this slide is non-IFRS approach, but as you can see, the variances here are not significant. So I think we can skip details and move on to segments and countries, and I will let Michał do this part.
Good afternoon. Let me start from banking operating segment, so the one which generated biggest growth of EBIT and dynamics. Looking at revenues, we grew by 3.4 million euro, what also resulted in growth of banking share in total revenues. And this is the first reason for this lower dynamics of revenues year over year and comparing to EBIT. This growth of revenues by 3.4 was generated by two sub business lines, core banking solutions and omni-channel solutions. In both of them, we have significantly higher sale of own licenses for on proprietary software. This is what Piotr mentioned at the beginning. And additionally, some growth in own services. This impacted and transformed in EBIT growth by 2 million euro, from 1.5 to 3.5 million, and resulted in a high profitability, 27%. When you compare to previous year, we see a growth by 9 points, but it is fair to say that this previous year isn't, let's say, the best benchmark. It was quite low. When you compare to whole 2020, the profitability of banking was 25%, and something what we expect as more usual quarter is between 20 and 25. Second business unit operating segment which contributed to the growth is payment. Here on top line we have 1.5 million euro growth. But it is important to mention that this growth is also related with change of structure of revenues towards own services. When we look at share of payment in total revenues, it is pretty flat and stayed on similar level as in 2020. Let me now switch for a moment to more detailed structure of revenues in payment. And here we see that the biggest contributor to growth is our POS-related services. And it is worth to mention that we report under POS also those new lines which comes from recently acquired entities, so ECRs and independent POS deployment. And to some extent, this growth is thanks to those new lines which generate on revenues. Both e-commerce and processing have slightly increased year over year. And processing is mostly in Serbia, and e-commerce growth is generated both by Turkey and Croatia, where Monri entity operates. And the last line is ATM. Here we see drop of revenues by 1.3 million euro. But this is related again with some change of structure of revenues. This drop is generated on resale of third-party equipment, and this is pretty usual that it varies between quarter. This time we had lower resale of ATMs in Croatia and Serbia, which was partially compensated by new sales in Slovenia, the one we also listed on our new deals, where we entered to new client. Let me come back to previous slide. And looking at operating profit in payment, we see grow by 400,000, and this is mostly caused by or generated by e-commerce and processing clients, so those where we sell on services. In case of this more traditional part, so POS, ATM, in overall the result is pretty flat, but there is some change of structure and a bit higher result in POS, where we have growth in own services and slightly lower in ATMs. The last operating segment is dedicated solutions. Here we have drop of revenues by 2.1 million euro, which also impacted share of dedicated solutions in total revenues. This drop is generated mostly by this part of dedicated solution, which is resale of third-party solution and equipment. we had a lower amount of such sales, mostly in Macedonia and Serbia. On other hand, own services part, so software and BPO services, those revenues slightly increased. On EBIT level, we have drop of result by 400,000, and this is mostly caused by investment into increasing capacity of delivery teams in this software-related part of dedicated solutions, and this resulted in the drop of profitability by 1%. Let me now move to result by countries. And here, the biggest growth is visible in Serbia. This is growth by 1.2 million euro, and this is related with discussed a moment ago increase in banking, where we had high sale of own licenses and also on services. This generated this growth. Also, processing, which we discussed, is run by a chip card entity in Serbia, and it also added to the growth. On the other hand, we have some decrease in dedicated solutions, what I explained a moment ago, but in total, Serbia increased by 1.2 million euro. Second, even not country, but region which contributes to increase is Iberia, and here we have increased by 0.7 million. What is good, that increase, which is part of this increase, is generated by post-related services. And this increase is not generated on sale of terminals, but on own services. We managed to win new client, and thanks to this, the result grows. Second line which we have in Iberia is part of dedicated solutions. These are BPO services, and after restructuring which we done during last year, now this line is positive, and last year was negative, so it also contributed positively to EBIT growth. And last country is with significant growth is Turkey, and this growth is partially built by e-commerce. We mentioned this in highlights at the beginning, that still high growth and high growth in e-commerce, and additionally part of dedicated solutions, which is resale of third-party solution called Dynatrace, also generated significant growth year over year. We have two regions where EBIT dropped year over year. One is Central Europe, where we report Czechia, Slovakia, and Poland, and second is LATAM. In both cases, first in Central Europe, in Czech there was a pretty big lockdown with wide limitations, and this hit our services in some part and resulted in drop of result. And similarly in LATAM, we have part of business which is very, let's say, related with possibility to operate on market, and due to lockdown it was limited, and we had drop of revenues in this area. Now we will move to liquidity and cash balance, and I will pass it to Marcin.
Hi again. So what happened in the first quarter with liquidity and cash flow? Traditionally, the first quarter of the year is not very good for cash in Asseco Southeastern Europe. This is due to, let's say, very intensive fourth quarter, and then the Q1 is usually when we pay back our short-term liabilities, including those related with taxes on faster business in Q4, but also our variable salaries are usually only accrued at the end of the year in major part, and they are paid after the results are audited and published. So a lot of, let's say, liabilities, short-term liabilities, which stay on the balance sheet at the end of the year and are paid only in the first months of the following year. And it was the case also in 2021. As you can see, at the bottom of this table, liabilities, short-term liabilities, provisions, and others, they went down by almost 14 million euros. But at the same time, we collected almost more than 9 million euro in revenues. So to a great extent, it covered liabilities payback. So generally speaking, I'm trying to say that this, structure of net working capital changed, let's say, less than we expected, and as a result, our cash balance at the end of March is almost comparable to what we had at the end of the year, which is not a common situation in Asseco Southeastern Europe. So as you can see in the top line of this table, cash and short-term investments is on comparable level to the end of December. In Q1, we also paid back some part of lease liabilities and bank loans according to our schedules, so regular activity. And one thing that may attract attention in this table is deferred payments for acquisitions. In this line, we present acquisition-related payments, but only short term. And this balance grew by almost 5 million euro. And the major reason for this growth was including here liability resulting from put option that minority shareholders of Necomplus hold. We don't have any knowledge about their intention to execute this option, but formally it is already, let's say, within the period of potential execution. Therefore, we need to present it as short-term liability, even though we do not believe it will be executed as soon. But even after this adjustment in presentation, our net cash went down only by less than 3 million euro compared to the balance from the end of the year. So again, very good first quarter in terms of liquidity situation. And let's have a look at dynamic cash flow. Let's have a look at what happened. Just to remind you, the left-hand side column is showing last 12 months ending 31st March 2021. So basically not much changed compared to the picture that we had at the end of 2020. Very strong operating cash flow with some investments in infrastructure for outsourcing that are the POS ATM machines that we use in payment projects. Infrastructure for independent ATM network is on comparable level that we had in 2020, so no significant investments in this area. Slightly higher investments in acquisitions. This is due to payment we had to make for Necomplus, and also two acquisitions that were conducted by our local companies. We acquired ThinkSolver in Serbia and WebSpot in Macedonia, with other capex staying more or less on comparable level. And maybe one more comment to this picture that I was also making at the end of the year, that basically this good cash flow generated from operations we are using to decrease our loan balance. Okay, so as you can see, debt service is much higher than new loans, and overall debt balance in our group is going down, and it's been like that for more than 12 months now. When you look at the conversion of our profits into cash flow, the numbers at the end of Q1 look really impressive. I would say they are even above our regular levels. Okay, so I expect that maybe in Q2 there will be a bit delayed effect of that we usually had in Q1, and maybe the cash flow in the next 3 months may not be as good as it was in the comparable time of 2020. So let's see. But still, I believe this a ratio of operating cash flow to EBITDA should be somewhere between 90 and 100%, and I think this is our long-term target. So this is more or less it about liquidity. Now I will let Piotr tell you about the outlook for Q2 and the rest of the year.
So thank you, Marcin. As you can see, the outlook is pretty good. We were showing the numbers after the year end, and the backlog growth was already impressive there. Then it still looks very good, both for the second quarter and for the whole year on a company level. So I will comment the whole year outlook versus analyst outlook, but let's look at banking and dedicated solutions. Yes, you see here the growth is even bigger. The growth in backlog, yes, so this is in close to 30% compared to last year, whereas for Payten, it's lower than that, but it still increased after the end of the year. So this is in Payten also nicely growing, and the Payten business is much more, if we can change the slides, it's much more stable, yes, so the business is much more recurring, much more stable, so small, pretty big operating leverage, so small growth in numbers contributes to the result growth, yes. Now, how does it translate this overall backlog for the outlook? We do see a very robust, very good quality first half of the year. Second half of the year, we still have some gaps we need to fill, yes, some question marks. Compared to previous years, we are pretty optimistic. Market analysts in their consensus are also optimistic. They are predicting growth, significant growth for this year for us. And today, the only thing I can comment, we think we will try to fulfill this growth and to achieve it, yes, but it's too early to give any other statements. In terms of other things and policies, we are still continuing M&A policy. The M&A is mostly done in local operations, strengthening our operations in respective countries, but also providing for group synergies. We are looking at e-commerce, we are looking at BPM segment, we are strengthening our existing payment, consolidating the market, also expanding in e-commerce as mentioned, and merchant-related business. Yes, so these are the directions where we will see further acquisitions focusing on merchants, e-commerce, and own IP topics. Yes, and I would say this is roughly it. We are pretty positive, optimistic, and we invite you to direct contact with us, calls to discuss any details that you wish. Another question, I think there is few of us, so you can ask questions either on chat or you can raise hand and we will enable you the voice option just to if you want to ask anything on the numbers. Wait a few seconds. So if there's no questions, hello. If there's no questions, then Marcin, I pass for the last word to you.
Thank you, Piotr. Generally speaking, I wanted only to say that this is, let's say, my last occasion to take part in this conference, in this team, because I'm separating with us actually end of April. Michał will take over my responsibilities, and I'm sure I'm leaving you in good hands. So thank you very much for cooperation, and I wish you, let's say, a lot of successes, good investments, including ASEE Southeastern Europe. Thank you very much.
Yeah. And we thank Marcin because it was a fabulous ride, growing one, and successful one. And I know Marcin will be with us, at least with his thoughts, in the coming time and supporting us from the distance. So thanks, Marcin. And thank you, guys, and waiting for your contacts and questions and any requests. I should